Hello and welcome. It's another half hour of markets, insights and analysis on Business Incorporated live from Channels Television. Here's what's coming up on the program. European Union Infrastructure Fund eyes clean jet fuel projects in Africa. And Egypt stocks hit record high as investors seek inflation offsets. In South Africa's Reserve Bank announces winners of its Monetary Policy Committee School Challenge. Hello and welcome to the program. I'm Willie Bung. Let's kick off with market numbers here in Africa. We begin with Nigeria, where the NGX was up more than 0.5%, 0.54%, 65,912 points. South Africa's GSE was up 1% at intraday, 74,574 points. Let's look at Egypt now. Egypt's doing not so badly at intraday. It's up 0. Let's look at Egypt's number now. We see Egypt up 0.37%. And Kenya closed Friday's session in the red. Now, if you look at Egypt, we still see Egypt's stock market has surged to a historic peak as investors turn to equities in a bid to counteract the effects of rising inflation. Now with effects, consumer prices on the rise, market participants are seeking alternatives to preserve the value of their investments, driving a significant uptick in stock prices and signaling optimism in the nation's economic prospects. Meanwhile, Egypt's stock market comes against a backdrop of economic reforms undertaken by the governments of the country at the moment. So let's see how the market in the Middle East is doing. Let's go over there and see at intraday, the Abu Dhabi index is down 0.16%. If we see that on the screen, Abu Dhabi down, Dubai flattish in the flat region, 0.00%. That's a flat line there. Elsewhere, we see Saudi also in the green, 0.16%. And the Qatari index, however, down. Mixed trading in that region at intraday. Now we go over to Europe, where once a year the result of Jackson Hole holds a meeting to discuss important economic decisions, and the U.S. Fed has been talking about interest rate hikes there. Lars Alter, our correspondent in Deutsche Welle, right there in Berlin, has been following this development over the weekend, and he has this to say to us. Lars, what have you heard that went down over the weekend at the Jackson Hole meeting?
Yeah, hello, Will. Thanks for having me. At the surface, it sounded quite good what we heard from Fed Chief Jerome Powell. He said that the U.S. economy is showing tremendous growth, much more actually than large parts of the world at this time. Speaking about the overall economy, Powell said it is powering ahead. He sees that hiring has remained healthy in the country. The unemployment rate right now sits around 3.5%, and that's barely above its lowest level in half a century. Powell also said that consumer spending is growing at a healthy rate, which seems to be directly related, of course, to a healthy labor market. The problem, there is such a thing as too much good news. Economists and analysts listening to Powell in Jackson Hole came out with a bunch of warnings for markets after the chairman's speech.
So why is everyone not just happy about the strong growth?
Well, that would be because of the fact that the Federal Reserve will have to make sure that strong economic growth doesn't lead to higher prices. Last year, inflation in the U.S. was dramatic, and now with all the good news from the economy, Powell says that current trends could keep inflation pressures high. He reiterated the Fed's determination to keep its benchmark rate elevated until inflation is reduced to its 2% target. Now, since Powell spoke at last summer's Jackson Hole conference, the Fed has raised its rate to a 22-year high of almost 5.5%. That is after a streak of 11 rate hikes beginning in March 2022. And that's a problem for many in the country because substantially higher loan rates, which are, of course, a direct result of the Fed's rate hikes, have made it a lot harder for Americans to afford a home or a car, or for businesses to finance expansions, for example. At the same time, items like rent, restaurant, meals, and other services are also still getting costlier. Now, many on Wall Street had been hoping that there is an end in sight and the Fed could eventually start lowering rates again, but from what we're hearing right now, that seems to be off the table. Much more likely, more rate hikes to keep the economy in check.
So what's driving markets as we enter the new week, Lars?
Yeah, aside from analyzing the comments out of Jackson Hole, investors are also looking towards China. Beijing has announced new measures to support its ailing markets there. The government says it will halve the stamp duty on stock trading. That is some relief to markets, but it is not necessarily the big kind of action that would change how the country's economy is going. Recently, China has been looking to support its housing market, a much bigger problem right now for the once booming economy that has slipped into weakness.
Thanks so much, Lars Holter. Lars Holter there in Berlin, Deutsche Welle's correspondent, joining us directly. Thanks so much. So now we move over to Asia, where mainland Chinese stocks and Hong Kong stock led gains in the region as Asia-Pacific markets started the final trading week of August higher. Chinese authorities have trimmed the stamp duty on stocks. Stock trades effective today. There's a move aimed at invigorating the capital market and boosting investors' confidence. The Shanghai Composite rose 1.13%, while Hong Kong's Hang Seng Index jumped 0.94%, led by consumer and healthcare stocks. Meanwhile, shares of China's Evergrande Group, the world's most indebted property developer, tumbled 87% in early trade as it resumes trade after 17 months. Japan's Nikkei 225 climbed 1.7% to close the day. Kospi in South Korea rose 0.96%. Australia's S&P ASX 200 gained 0.63% to close after the country's retail sales climbed 0.5% month on month, higher than the 0.6% economists had expected. Now, stock futures rose slightly to close off the final trading week of August. In the U.S., futures tied to the Dow Jones Industrial Average rose about 0.26%, while S&P 500 futures and NASDAQ 100 futures added 0.18% and 0.29% each. Stocks are coming off a winning session following fresh remarks from Federal Reserve Chair Jerome Powell. Speaking on Friday at the annual Central Bank Conference in Jacksonville, Wyoming, Powell indicated that the central bank would proceed carefully with additional rate hikes to tackle inflation. Now, this week, Wall Street will be digesting more economic data, such as August Dallas Fed's index ahead of Friday's monthly jobs report. Now, looking at Nigeria, we see that Nigeria has an estimated 28 million housing deficit as of 2023, indicating that the country needs at least 28 million housing units to provide adequately for the population. And that's according to the managing director of Landway Investment Limited, Shola Bello, who was speaking with Channels Television over the weekend. Now we're seeing, she disclosed that the sector needs a huge investment from the government to build enough for the entire population. Now, gold prices firmed on Monday despite U.S. Federal Reserve Jerome Powell's hawkish stance on interest rate hikes as markets sought direction from economic data this week for confirmation on the rate trajectory. Spot gold was up 0.1%. U.S. gold futures gained 0.2%. Now, interest rates tied to the Fed's policy rate priced in the more than even chance of tightening at either the November or December policy meetings after Powell's speech. Elsewhere, spot silver fell 0.2%, platinum was down 0.1%, and palladium added 0.8%. Now we'll move over to Africa, where Starling Global and Ideal Limited has commissioned 2,000 metric tons of dry cocoa warehouse in Ikom local government area of Cross River State. Now, according to the managing director and chief executive officer, Mr. Adeyemi Muktada Adeniji, the essence of the warehouse is to give back to the society through job creation and support cocoa exporters to grow their businesses. Let's take a listen to him.
All is set for the commissioning of a 2,000 metric tons capacity dry cocoa warehouse in Ikom local government area of Cross River State by Starling Global and Ideal Limited. It's a significant step towards boosting the preservation and export of cocoa and by extension the local economy of the people, a reason they've all come out to be part of history. The vision of Starling Global, according to the chairman and CEO of the company, Adeyemi Adeniji, is to create wealth and share it. And ICOM, which is one of the highest producers of cocoa in the country, is a worthy choice of the investment.
When we came here to buy this property about 14, 15 years ago, the real motive behind it was to encourage all foreigners from everywhere to understand that we must develop the host community.
Nigerian Export Promotion Council as well as the Cross River State government are excited over the strides and impact of Starling Global.
If there's any firm, any company that is making us proud in Nigeria in terms of exports, is Starling. In 2021, a grant was given to the MPC as a form of COVID relief to firms that were affected by COVID-19. Part of that grant is what you can see today.
Your action today has shown that you've not just given lip service, that you mean business. And I want to tell you that in Cross River State, we mean business.
As far as the people, as well as cocoa farmers, are concerned, they no longer need to worry about joblessness.
He has brought a wonderful development. He has created room for employment.
And we are doing this to the glory of God and for the benefit of humanity.
For the management of Starling Global, the commissioning is a demonstration of the company's commitment to the growth of the non-oil sector of the economy and sustenance of its wealth creation drive.
Next, more stories from the African continent. Do stay with us. This is Business Incorporated. Welcome back. Now, African economies are at a pivotal juncture, and the current focus is to help unlock financing for continent's development goals. High public debt levels and the uncertain outlook for international aid limit the scope for growth. Now, the private sector will have to play more of a role in economic development if countries are to enjoy a strong recovery and avoid economic stagnation. Benson Adenuga, Head of Office and Coverage Director of Nigeria British International Investment, joins us. Good afternoon, sir. It's good to have you on the program.
Thank you for having me. Good afternoon.
Now, development finance institutions are increasing their coverage of Africa. How do they encourage greater private sector participation of investors in Africa, saying that it's a bit lacking? And why is this important?
Thank you very much, Will. It's very important because of the enormity of development challenges facing us in Africa. To give you an example, last year, MBS indicated that 133 million Nigerians are multidimensionally poor. In addition to that, if you look at the amount African countries require to meet the green assets objective that they have, is over 130 billion. This is why this is very important. In terms of what DFIs do to mobilize the private sector, first of all, we are counter-cyclical investors, which means that when things are difficult, we continue to invest. We don't run out of the continent. That is the first point. The second thing we do is really by establishing platforms that enable us to be able to mobilize others to invest in the market, looking at the pioneering investments that we have made in our continent.
So you've talked about the urgency of this. Why is it in particular, what makes it more urgent? You talked about the poverty levels. Why is it so urgent for Africa to get it right?
It's very important for Africa because if we don't address these issues in Africa, you have seen the number of people who are sick, who are poor, and the inability of our governments to be able to single-handedly address all these issues make it particularly important. I think this is where the urgency is from. And when you look at the implications on the large population we have in Africa, it's making it even more urgent for us to act.
So with new ways to finance, we're seeing impact projects coming into the continent. What other, how do we align this with stakeholders' interest? How do we make sure that stakeholders come in and they also benefit from this investment and not just coming to Africa and maybe not making returns as they wish?
I think the important point is to ensure that we recognize the objectives of the various type of investors we have. And we design investment platforms that ensure that we are able to mobilize those various types of investors to come into our market. To give you an example, BII invested $75 million in green basket bonds to ensure that we can invest in creating green assets through SMEs. Now, such a vehicle will attract investors with a focus on climate finance. In addition to that, we've invested $10 million in the SDG Outcome Fund. And what that does is to mobilize investors who are able to put money or willing to put money into impact bonds. By the time we have those specialized vehicles, it brings in different categories of investors who are able to bring funds into our market and ensure that there is increase in the amount of funding available in our markets.
You mentioned this clean energy, more like sustainable energy type of investment. Are there other kinds of investment platforms that you would want to share that investors probably who are interested will want to come in and be a part of?
Indeed, Will. If you look at our market, you will see that the SME segment is the largest employer of labor and contributor to GDP in our market. And as BII, we have invested in different vehicles to ensure that we demonstrate the viability of the segment. To give you one practical example, in Nigeria, BII invested $100 million in First Bank of Nigeria. That funding is for on lending to SMEs, and 30% of it is earmarked for women-owned businesses. Now, that is a platform that we use to demonstrate support to the SME space. And we can, through that, bring other investors into this space to work with us to enable us to be able to do. That's one example. The other example is the financial space, where as BII, we have been investing through venture capital funds that provide financing to early stage businesses. In addition to that, we also put money directly into those DFS companies to ensure that they are able to operate from early stage to growth stage and then support the most vulnerable and small businesses and individual and households in our community. If you look at those two, it really helps to improve the level of funding available to support development in Nigeria and in Africa.
Thank you so much, Mr. Benson Adenuga. We do hope that these projects and investments, achieve the impact that they are destined or they are being deployed to achieve. Thank you so much, Corporate Director of Nigeria British International Investment, for sharing your thoughts on the program.
Thank you very much.
Now, as part of efforts to catch them young, South Africa's Reserve Bank has announced the winners of its Monetary Policy Committee MPC Schools Challenge. This is an initiative with the aim of giving high school students an insightful experience into the mechanisms behind economic policy decision-making. Their task was to emulate the real-world task of drafting SARB, that's the South African Reserve Bank's MPC statements, and immerse themselves in a rich tapestry of resources from traditional media to digital platforms, deepening their understanding of monetary policy. The South African Reserve Bank Governor, Lestacia Anyaho, and Minister of Basic Information, Mrs. Angie Mosheya, were present to celebrate the MPC Schools Challenge winners in Johannesburg. Our correspondent, Innocent Samosa, reports.
Decision be on interest rates.
Launched as a pilot program in 2012 in partnership with the Gauteng Department of Education, the Monetary Policy Committee MPC School Challenge was initially limited to public schools. Minister of Basic Education, Ms. Angie Mosheya, says the challenge now includes independent and private schools.
The challenge did broaden its horizon by inviting independent and private schools to participate. And the Monetary Policy Committee schools now at its national scope offers grade 12 economic learners a unique and transformative journey into the core of the South African Reserve Bank.
The competition brings into focus a critical aspect of the economy, the Monetary Policy Committee's role in determining the purchase repo rate. According to the Reserve Bank Governor, Lesetja Kganyago, the initiative is designed to enhance the economic literacy of young South Africans.
This challenge has deepened your understanding of monetary policy, and that this will inspire you to pursue careers in fields of economics and central banking. And hopefully, there are some future governors amongst your ranks.
Winners described their overall experience of participating in the MPC School Challenge and valuable lessons or takeaways.
Overall,
interesting development there in South Africa. Now we'll move over to other parts of Africa where the European Union is scouting Africa to back clean jet fuel projects under its Global Gateway Infrastructure Fund ahead of an anticipated boom in demand for environmentally sustainable air travel. The EU has pledged to dedicate half of its €300 billion infrastructure plan, which is seen as a rival to China's Belt and Road Initiative, to Africa. Now, the fund has already backed renewable plants, green hydrogen initiatives, vaccines, and education projects in Africa. And the official says is now looking into sustainable aviation fuel, that's SAF. SAFs are low-carbon fuel alternatives for the aviation industry and can be made from various crops, among other feedstock sources. And that's a wrap on Business Incorporated. Thanks for watching. I'm Will Ibang. I'll see you tomorrow.